So Tesla has pulled back almost 30% since their Q2 earnings in late July. Let's take a closer look at the chart to see how it is developing. Now, there are a few factors that may have caused this pullback, whether it was the CFO departure, a pullback in production for Model 3 and Model Y, China price cuts, overall market weakness, or just good old-fashioned profit taking after a nice run. So what is really catching my attention in this chart is this morning star reversal pattern that we just printed. And this is often created at the bottom of a downtrend where you have a gap down, you'll print some type of doji followed by a gap up with a strong bullish candle. And this is often the sign of a trend reversal. Now, we could have got a little front running here because after we broke that 100-day moving average, I think a lot of traders and investors were watching that trend line and that 200-day moving average for possible support. So maybe everybody was just too much on one side of the boat, and that's why we got this contrarian move without touching the trend line or the 200-day moving average. Now, even though we temporarily broke below this 100-day moving average at 220, we quickly reclaimed it. Now, in an earlier video, I flagged this 220 level as being a great area for support in the stock and where I am short some September puts. So if you want to learn more about that, you can watch this video here where I go into greater detail. Now, I have no idea if this is the ultimate bottom in Tesla in this recent down move. I think we can bounce a little bit from here, but we just have so much support from the trend line, from the 200-day moving average, and jumping into the weekly, we just have a confluence of support between the trend line, the 50 and the 200, all around this area between 195 and 220. So there's a lot of support for the stock in this zone, and I think this is a great time to start averaging in. So what I'd really like to see here on the weekly is for us to print an inside week, and that's basically where we stay inside of the previous week's range, and that is also the sign of a trend reversal. So a scenario that I think is very likely to play out is if we hold this 200-week moving average around 195, 200, we can print the right shoulder of this inverse head and shoulders pattern and then break out of this downtrend that we have been in. Now, it's totally up to you how you want to play the stock, whether you want to sell puts, buy calls, or just buy the stock outright, but I feel we are setting up the same way we were in early spring. Now, let's not forget that markets are seasonally weak in September, so I think we can chop around here, but let's definitely start to average into Tesla.